Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 3rd of November, 2016. Thanks for joining me. Go Cubs, go. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not necessarily indicative of future results. I'll start off by saying that I didn't sleep much last night. You may not have heard, but not a huge baseball fan, but Chicago made it to the World Series for the first time in 108 years and won by 1 run last night in a game that was really intense. And for once, a baseball game's exciting. Not a shot against baseball fans, but I definitely was there to watch the city win. The neighborhood was on fire, not literally, but there was a lot of noise all the way up to about 4 a.m. this morning, so there was very little sleep. I decided to actually throw some clothes on late at night and walk out there and just walk with the fans. The streets were full of people. Again, let's so I'm not sure how coherent I'll be this morning. I intended to just pass on the trader bite today, but that would throw off my routine for the day as this is integrated into a habit. So that's my disclaimer for anything that doesn't make sense. Just letting you know up front. As far as what has driven the market this morning, um, a fair amount of news. Hong Kong's October composite came in weak. It is the 20th consecutive month of contraction there, a 3-month low. But also a key news for the UK. A couple things. The High Court, which is like their Supreme Court, basically ruled that the government, the Prime Minister, cannot invoke Article 50 to put Brexit into effect without Parliament. This is a ruling that takes power away from Prime Minister May and forces her to go to Parliament to get almost that referendum ratified. This kind of puts things in a weird place as far as Brexit's concerned, because I know a lot of people had changed our minds after the vote was in. The October Challenger job cuts came out at 6:30 Central, came in at 30.7 versus 44.3 week. The Bank of England left interest rates unchanged. However, it said um, that it has very low tolerance to any interest rate rises, any changes in the interest rate, and that's coming from Governor Carney. The statement is there are limits to tolerance for CPI overshoot. BOE is monitoring inflation expectations there. And so this could be the UK could be the first of the bunch to start raising rates into next year. So that's something that's a departure from the usual BOE release that we've had. Initial jobless claims came in higher than expected. That's of course worse. Continuing claims came in slightly better, 2.03 million versus 2.04. Anyway, not my intention to go over the news, but these are the things that have been driving us a little bit since early this morning. As far as what we're expecting for today, going forward in Eastern Daylight Time, at 9:45 Eastern, we're looking for services PMI for October, 54.8 expected. Then at 10 o'clock, we get durable goods and factory orders. Durable goods expected at negative 0.1%. Factory orders at plus 0.2 for September. And ISM non-manufacturing also at 10 o'clock, expecting 56.0. And other than that, we have ECB speaker Weidemann at 11 Eastern. We have BOE speaker Cunliffe at 4:55 Eastern, and ECB speaker Kerr at 5 Eastern, and the docket for earnings is pretty heavy today. So there's a lot of flow coming in from the earnings sides. So that's how things are shaping up. Let's look at what we expected yesterday. Here's the plan for yesterday. The expectation was for a choppy open, an attempt higher, but the main draft on yesterday's primary hypothesis is down. The line represents FOMC. I cannot see beyond FOMC and what the market is likely to do, so I stopped the expectation or the play into the FOMC, and then once the FOMC is released, I generally scalp that release. Once it's released, I basically reset and do a new set of hypotheses into the close. But that's what was expected into the FOMC on a primary hypothesis. The secondary hypothesis is to test down first and then start pushing up and work its way into that 2110, 2111 area where I said I expect a fair amount of resistance and I'm expecting to be a seller there on the first push. So here's what we got. Pretty busy session. We got hypo 1 almost to the T there, a push to the prior day's point of control. Find sellers. You could see that it dried up pretty quick on the profile right down here. And then we start to rotate through mid. Mid held for a tiny little pop of 2 points, and then it fell through. And then from there, the key opportunity was to sell short and look for it to push down to 92 again. It took a while, but ultimately we had that impulsive move down right before the FOMC release, and then the FOMC release led us to push down to 87 and a quarter, and that's being recorded as the FOMC low. The FOMC SOC, or the scene of the crime, or the point from which the auction was interrupted by the FOMC news, is 2095. You could see we went right back to it on the drop, and then the high of the FOMC was 99.75. Late afternoon, we had a really beautiful setup here, a double bottom against the mid from the low to 99.75. That's 50% right there. Saw a fair amount of buying going off in this box right here in this zipper, and that set us up for a potential break of 99.75 and a push through the IB back into the IB, and the expectation was to push back into about 2102.50, that LVN there. And it got within 2 ticks and then failed over. The market just found sellers into the close. Sorry, I'm getting a lot of texts. So I'm going to turn that off. Just people celebrating this Cubs stuff. Shut that down. One of the key elements to note from yesterday is that we had the prior day on Tuesday, we had a sort of a clear double distribution on the profile of Tuesday with an LVN in between, and the HVN was right down here from the prior day at 2098.75, and the yesterday the point of control was 2098. There was a lot that traded in this area right here, creating that point of control. This to me looks like the market has completed its drop. Let's switch to a 15-minute to see what that looks like. I talked about the strong potential for continuation on this move, a pullback, and that was what Hypo 1 was, and then a continuation at some point. And this looks like the continuation has taken place. It is pretty important here for buyers to stabilize these prices, and for the price for investors to see, or speculators to see, that prices are low enough to step back in, because this is looking to stabilize. So the fact that we held the point of control at 2098 even against that 98.75 prior day HVN, to me says that today is likely to be a balancing day and a potential for a reversal back up, and a potential push to that 2110 again. So that's how things are shaping up. If you look at the overnight, had a nice little push down. So this was yesterday's profile right here. This is the Globex from last night. You can see that we reopened, and tested lower. We pushed back up to where we had closed, and we had this impulsive move down on that Hong Kong release. The bad news there, but the market has tested the mid and VWAP for a small rotation and it finally broke through and has been in a trend up into the European session with the point of control near highs. Very bizarre looking profile here that looks completely incomplete on the high side. So this sets us up for an open auction that is likely to take a rally push at least initially before sellers are enticed to step back in. There are a lot of just a ton of bears out there right now, and rightfully so. Given the action that we've had, we've moved into the balance that we've been in the uh, since the uh, beginning of summer, and we have moved into the balance that we've had from the beginning of the year through spring. But the expectation this morning is for an open auction that tests down, finds buyers, and I'm looking for the rotation higher today to stem this selling that's been going on for consecutive days this week. So that's the primary hypothesis. The secondary hypothesis is naturally the opposite. A push up, an attempt to push up through to 2102, finds sellers, chops around, and then eventually starts to turn lower. And then I expect it to just hold in here. I'm not looking for this to push any lower. As discussed yesterday, a test of 2092, the first test of 2092 is likely to be bought back up. And we did buy it back up, but the by the time we got to it, it was FOMC, and all bets are off on that. But that's hypo 2 there. I expect buyers to step in this lower end of this CLVN zone to take it back up through to around 2110, 2112, the top of the CLVN zone. That's my expectation for today. So I'll leave you with those thoughts, and of course the reminder that you know it's a good time of year to it's the kind of environment where you want to wait for your setups to materialize as opposed to pushing positions. Watching risk for stage 5, I see people pushing positions all the time, and there's just no purpose to it. You want to take your bet. You want to let the market let you know if your bias is correct for that moment. Take your loss and then reset and look for the next trade as opposed to defending a trade that just isn't working, committing more and more of your account to it. This is something that is a demon for a lot of traders, and we see it over and over and over. Just not wanting to accept that we are wrong, and the fact that we are going to be wrong in trading is just is as natural as breathing to a trader. It's just something that happens all the time. Good luck, and I'll catch you tomorrow. Stage 5 traders, we have our webinar. We have our webinar at noon today. I'm going to cover what would have been covered in webinar 4.2. We're going to do a statistical study. The invite for that will be in your mailbox in an hour or so. Take care.